This conference will now be recorded.
Hello, everyone, and thank you for being here today. We're going to go through a series of classroom training style modules, beginning with the first one, and that is titled Final Expense Life Insurance. And on this module, we're going to learn what is it, who buys it, and how is it sold to people. But before we do have a few housekeeping requests and disclaimers. First and foremost, I want everybody at this time to turn their mobile devices on vibrate or silent, and please store them away in your pocket, in your desk, or in your purse. Please do not have them on the table. And this is for respect of our neighbors. Sometimes our cell phones do make some noises and it can distract our neighbors, and we would like no distractions. Secondly, please, as best as you can, no talking during the training sessions out of courtesy for everyone in the room. We're going to ask that you all take notes as you will all be asked about what you learned, and it is our expectation that you understand everything that is taught to you with our help, of course. And if there's anything you don't understand, we will absolutely do our best to help you to the best of our ability. We want you to write down any specific questions you have. They will all be addressed throughout the training videos at various different checkpoints. And more importantly, we have created an open discussion environment. And what I mean by that is that if you feel that you can add some value to any of our training, or if you want to share some real life experience, we absolutely welcome it with open arms. And we ask that you do that during the question and answer sessions. So we're going to start off with what is final expense. Now, some of you may know what it is, some of you may not. First and foremost, what final expense is, it is non-participating whole life insurance. And because all of you have insurance licenses, I'm going to go with the expectation that you know exactly what whole life insurance is. Insurance on your whole life, typically to age 100. And what non-participating means, and I'm sure many of you probably have forgotten that from our examinations, non-participating means that the whole life policies do not pay dividends. That's what non-participating means, and this is not something that we communicate willingly to our clientele, but it is for your own sake that our whole life policies, final expense whole life policies, are non-participating, meaning they do not pay dividends. Simplified issue. Simplified issue means that there are no medical exams. There's no nurse that will come to their home to do a blood draw or a urine specimen. And in most cases, there are no attending physician statements. They are sold in smaller face amounts, typically as low as $3,000, although some states, such as Washington, do have their criteria where it cannot be less than $5,000. And for the most part, most of the final expense carriers go up to 40,000. Some do go a little bit higher, but typically between 3,000 and 40,000 is the typical. And they are sold with budget-friendly premiums. Uh, they are issued very quickly. The way that the process will work when we get into the underwriting, it is issued on the same day, and we can have the coverage if the person qualifies go into effect at midnight today. It's a very simple pass fail underwriting process, and we've devoted an entire module to the underwriting process. And that we offer coverage, and final expense itself, the industry, offers coverage is extended to anyone regardless of their health. And for those of our clients that tend to be a little bit um, more unhealthy and have more debilitating medical conditions, we do offer a guarantee option for them with a limitation in the first two policy years. And whole life insurance policies that fall under the final expense category absolutely do build cash value over time. They have an automatic premium loan provision, which means that if the individual misses a premium for whatever reason, The premium is taken as a loan against the policy, so the policy does not lapse. It is a choice, and that it also has what's called a reduced paid up option. Reduced paid up option means that at some point in the future, if the individual decides to discontinue making insurance premiums, they would have an option of reducing the death benefit to a fully paid up policy. So, absolutely wonderful things for people in whole life final expense insurance. Now, who buys it and why? The typical buyer, although this is not the rule, this is just the guidelines. The typical buyer of final expense whole life insurance is generally somebody aged between the ages of 45 and 85. Although our office, this office here, we tend to target 50 to 80. You will, along the way, have a conversation with somebody less than 50, and you will, along the way, have a conversation with somebody over than 80. Marketing is not absolute. Things do pass through the filters, and things sometimes don't pass through the filters, although we are targeting 50 to 80. It's generally purchased in lower income households, again, although not the rule, more of a guideline. They are purchased for funeral planning purposes, burial coverage, cremation plans. Oftentimes, clients want to leave a legacy behind. They want to leave some money to their kids. They want to leave some money to their grandkids. Not uncommon at all whatsoever. You know, one of the ways that grandparents show their love is through their gifts to their grandkids. It's the way that they show their love. Paying debts left behind. Some people are just adamant about leaving this earth debt free. They don't want to leave that burden on someone else, especially if it's a joint debt or if they've co-signed a debt, or a debt was co-signed for them rather. Replacement of income. In a husband and wife situation, many of our clientele, their sole and only source of income happens to be their Social Security. And in a traditional married household through the years, especially if they were raising kids in the 60s and 70s, traditionally the husband was the one that worked, and the wife was the one that stayed home with the children, who also worked but worked at home. So it's not unusual in a situation like that for the husband to have a larger Social Security than his wife. And upon death, the surviving spouse gets the larger of the two. So that can absolutely pose a strain on a household, especially if they depend on both Social Security. So replacement of income is a big deal, especially in this market. The other one you will come across sometimes, but not so much, mortgage protection program. For some of the older folks that refinance their mortgages or take out a second mortgage, their concern would be if they pass away, they don't want their wife or their husband to be left having to pay a mortgage. It may be too cost prohibited for them to insure the entire mortgage, so they'll purchase what's called a critical period plan. And a critical period plan, and I'm not going to get too deep into this, is a critical period plan is where rather than insuring the entire mortgage and the entire mortgage being paid off, they rather insure 2 or 3 years worth of mortgage payments. So if their mortgage payments are $1,000 a month, they may want to insure 2 years of payments, $24,000, so that if the husband passes away, the wife doesn't have to immediately move. The wife doesn't have to immediately make decisions. So they will purchase a critical period plan because those 2 years are considered a critical period, and it will give that surviving spouse some time to make decisions. But while they're making those decisions, at least their mortgage payments are being made. And then finally, people with medical ailments that would generally pose a concern for a full paramed underwritten policy. Uh, Generally, for people that have major medical conditions, where, if we sent the nurse out to draw some blood and we requested medical records, more often than not, they would be declined. So these are the typical people who buy final expense burial plans and the reasons why. Um, how is it sold to people? And it's very important for you all to know how the product is typically sold to people, because this will help you become better and more desirable than your competition. So once you learn and understand who your competition is, it will make you become more knowledgeable and much more educated when you're speaking to the individual, because the individual is marketed to. Absolutely. The number one way that they're marketed to right now is direct to consumer. And that's the main areas that they receive this type of marketing generally is through television commercials, is probably a big one, and then direct mail, newspaper advertisements. And typically, the direct to consumer product is either sold as term insurance, which expires, or it's sold as a guarantee issue based product with a 2-year waiting period. It's typically more expensive because in a guaranteed issue scenario, they're taking on every risk. So they have to balance the portfolio out accordingly, which means even the healthier people pay more in premiums. And then on the term chassis, the premiums generally increase as they get older. The two most commonly sold term carriers are AARP and Globe Life. Anytime you hear anybody tell you they have AARP or Globe Life, it's instantaneous term, and the premiums increase every 4 or 5 years, and it expires at their age 70 or their age 80. Very important to know that. And then the other two heavily sold direct to consumer products are Colonial Penn and Mutual of Omaha. You have seen the television commercials with Alex Trebek slinging the Colonial Penn plan. And if you ever look at the fine print, it says on the commercial a 2-year waiting period applies. The other way that final expense is sold, and it's probably a way some of you in this room have attempted or tried, and that's face to face through the field agent distribution. And the two main areas that they market through is direct mail and Facebook advertising. And if you've ever purchased leads before, or if you're ever an agent before that did face-to-face sales, you know that the leads are very expensive. They range anywhere from $25 upwards to $40 per piece. And one of the main areas, and I see that there's a typo over here, but one of the main ways that the agents have to get their return on investment is they have to do some heavy door knocking and phone calling to set an appointment. It doesn't necessarily mean that you're talking to qualified individuals, just individuals who filled out a postcard and sent it back. And the face-to-face field agents, the way that final expense is sold through them is either through the independent or the captive channels. And for anybody that's spent any amount of time in the final expense face-to-face business, y'all know that the turnover is extremely high. It's not unusual for a captive channel to turn over 100 agents in a given year in one particular region. It's not an easy thing for people to sell, especially when they're paying, through the nose for their marketing. And then there's finally what we do, and that's telesales. And final expense telesales in the last 10 years is the fastest growing distribution segment for final expense. And the reason being is what we're learning is that people do not want strangers to come into their homes. What used to be very normal 20, 25, 30 years ago, where you would be sent out to your neighbor to go borrow an egg or borrow a cup of sugar, where it was not uncommon for somebody to come by in the neighborhood and knock on your door, and you would invite them in. People were a lot more friendly. Maybe life was a bit more safer. Things were just different then. It was not unusual for you to go into a home of a stranger, of course, being invited in. Nowadays, what we're learning with the baby boomer market aging in to being over the age of 65, and we're kind of hitting that bell curve right now, where the top of the curve is representing the largest amount of people turning 65. This segment, this group, okay, we'll call them the baby boomers, they don't want people in their homes. Like it's just they have just spoken. They just don't want people in their homes. So the telesales distribution has been growing dramatically over the last 10 years. It's high volume. It gives you an opportunity to speak to a tremendous amount of people. It gives you an opportunity to uh, talk to many different people from all different walks of life, all over the country, all looking for the same thing, and that is to make sure that if something happens to them, the burden is not placed upon someone else. The main areas where telesales works very well is going to be in the live transfers, television commercials, and then soon to be, of course, Facebook advertising. Right now, we're utilizing live transfers, and that tends to be the uh, best converting lead that we have learned at this time. So this should give you guys kind of an idea. The sooner that you know, and the quicker that you learn the direct to consumer area um, for the way that people buy final expense, the better off you'll be. When we get into script and script understanding, which is going to be in the next segment, we're going to go over and talk about how we box ourselves out from the direct to consumer channel. So at this point, I'd like everybody to just take a quick little breather, and why don't we take about 10 minutes? And at this time, we'd like to also ask that everyone look at their watch and make sure that everyone is back punctually in 10 minutes.